Good evening, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for the evening of Thursday, the 8th of August, 2024. Now, I am hoping tomorrow to get your weekend videos out. If I can't get them out tomorrow, I'm all screwed up then, because I don't know, I won't be around on Saturday to do them. It might be Sunday night or they might not get done, so tomorrow's important that I get them out. I have a friend, and his son is going for the world speed record in a Lamborghini from a standing stop, half-mile course, straight course. He has to go over 259 miles an hour. You realize what that is in a half mile? And I'll be there for the event, so I have to go to Indiana, and it's a big deal. He just took the title in Texas. He's done it, and the car's been geared up. It's over 3,000 horsepower. And it is a real Lamborghini engine, drivetrain. I'm a car freak, so I love this stuff. And he'll bring toys along that we can go on the course with and try them out. It's funny as can be. It's expensive as can be. All right. So you can see these markets are up. Why today did the stock market go up? Remember, we had what I call a bounce on Tuesday. We fell back yesterday, and it felt like what they call a dead cat bounce. Now, what that means is you drop, and they say a cat. What idiot did that? But imagine you drop something, it gives you a little bounce, and it bounces back down. Got it? So that's what they termed it. I hate the name, but I can't help that that's what they call it, and I'm a cat lover. Right now, we have 3 house cats, 8 outdoor cats, all right? So my wife's a freak with these animals, and we don't keep them that way. They're all babies that were born, and she gives them away. That's too much animals. But to make a long story short, the unemployment claims came out, and what they did is they fell. And once you dove in, the people that went back to work were Texas, the people, Michigan, and Missouri. Now let's talk about Hurricane Beryl. Let's talk about some of the layoffs that we saw in auto plants, lack of production needs, retooling, all that was going on, and people are returning. So you need more than 1 week to show that. I'm the first to say that, but I think that your rally today in these markets, and it was one of the biggest rallies of the year, in not the hugest volume of the year. It was an interesting day, and I'm watching it and going, I thought I was right when I pointed out, and I did a special report that's on my YouTube channel. Go there, and you'll see the report on that from the jobs report. And I point out that, do you really think you lost permanently 450,000 jobs? And if you look at the weather events, it doesn't make sense. I don't know how many of them are coming back to work, but I would assume, just assume, 70, 80% or more. And that means that jobs report, while it showed a lot of weakness, maybe it wasn't as weak, and that's what traders grabbed onto today. We'll find out more in time. There are no major economic reports due out right for tomorrow morning. Next week we get CPI and PPI. So what has happened in the S&P? It has returned to the number we talk about so often, the 18-week moving average of closes, and this is, in theory, what it did back here. It found its support and it moved higher. Am I screaming at you, we're going up, making new highs? You don't hear me saying that, all right? You do hear me saying this is supposed to be the support zone, and that's what I'm seeing. When we look at the action here, the market has come down in layers. You almost can box this off. You can pretty much box this area off, and you can almost box this area off. It's interesting what it's doing. But when you put on a swing line, everything makes more sense. Here's the chart without a swing line. Here's the swing line. Suddenly you have higher lows and a higher high. Okay, we're back in an uptrend. To be a true uptrend, the market has to get through and stay over the 18-day average of closes. It just did it today in the gold market, the same type of pattern. This market's not there. The battleground's first going to be the 100-day average, so this is at best a bear market rally at this point in time, with further resistance possibly at the red line, the 18-day moving average, but here's your 100-day. And the support came in right at the 200-day average. The market held the Bollinger Band with this exception, the spike where it came right back into it and then has rolled back up, okay? Am I ready to declare this market's back in a bull trend? I am not. But I am saying not to be short, because when you get an uptrend here and you have the bias down, you have nothing. And now that the market's created this pattern, for me, I don't understand being short that. When I take a look at momentum, it's trying to turn back up, okay? When I take a look and go further with the NASDAQ, you can see you're getting your bounce, and look at how well defined the resistance is at the 18 and the 100-day average of closes. Of course, the market's done the same pattern as the S&P, and it's no longer in a bear pattern. So you're getting what we call a rally that held, when looking back at it, pretty well and fought the battle at the 200-day moving average in gray and that black line, the dashed one, the Bollinger Bands, and momentum is turning back up a bit. The Dow is stuck at the resistance, what I expect on the other two markets. It moved already up to its 100-day average. If it can clear it on a good close, well, you might be able to get back to that 18-day average, and then you'll look back and say, darn it, that 200-day average that Ira said, the market tested it, and it didn't go anywhere from there. And the same thing is happening in the Russell. You know, we look at these charts together each night, and that's what I'm seeing on it. So I had reasons to be out of shorts much earlier when it hit the 200-day average, just the way that I teach in my charting course, which I'll talk about at the end of this. And from there, you take it the next step. In the note market, this is a pullback. So we're watching the yields go back up, and that makes some sense. Remember, what's this looking at? It too saw the jobless claims, and one of the biggest drops of the year coming in is how some of the people are describing this. Okay. So what's going on? Well, we're looking at the jobs market might not be as weak as the jobs report showed. So you got a flux in here. Do I think jobs are weakening overall? Absolutely. Does this report that came out in the unemployment claims change that? Yes. But all it does is say it's not falling over a cliff. It's slowing down. The wobbling we've talked about for weeks, and then this coming in, we're seeing that. But it is still in good shape. Not as bad from my point of view, and just mine, I can't speak for other analysts, as to what that jobs report led some people to believe. In the 5-year note, different game. Suddenly we have lower highs, lower lows, all kinds of reasons that you can't be long anymore if you pay attention to swing line, but not a reason to be short. And that's because you're still over the 18-day average of closes, and momentum is quickly getting away from being overbought. In the dollar, I think the pros are going to try to probe the short side of the market should it get up into this 103.60 to 70 zone. The combination of the 100, the 18-day average, and I think they'll get out of the trade if you get back over here, the high that you made right at that very peak. When we take a look at the eurocurrency, you now have the trend down. You have an outside day to the downside. The market went right to the objective on the same day. It doesn't have to do anything from here. It's done that. But the trend's down, the bias is up, you're fighting. In the British pound, you had an outside day up yesterday, and today rather, and you're following through. Now, part of that is that they didn't get the riot problems they thought in the UK overnight. They deployed, I heard, 6,000 people, and there were a lot of protesters against what the protests are about. They're not racist. They understand the problem of immigration and what is going on there, and it's a huge fight in the UK. And the market did find a way to finally say that this move is over, that leg of it, with the outside day, unless by Monday, not Friday, by Monday, you take out that low again. But if you do that, you're right back into major support at 126.50. In other words, too confusing of a chart. Bitcoin suddenly getting a bid. came alive today with an outside day up and getting great follow through tonight. I'm expecting a challenge of the 18-day average, and that's where I think the market should have problems. When we look at crude oil coming back up here, everyone is waiting to see what's going to happen in Israel. Now, obviously, you saw the news like I did. Nothing happened with the warning to Egypt to not let civil planes go into Tehran airspace. What that means is Tehran was prepping itself for retaliation then, not for the war, but for retaliation from Israel should missiles come, and that's why they probably wanted things shut down, and they were testing whatever defense systems they're going to have at work there. That makes all the sense in the world as to what it was, and I didn't know what it would be, but how often do you hear a country calling another one, especially Egypt, because they're so involved in the negotiations for peace? Do not let your planes into Tehran air. I say Tehran because what I read, I was a pilot. It's the Tehran airspace. They didn't just say Iran. Had they done that, it would have been different. They didn't say that. At least that's what I read. Higher high, lower low. I see resistance right in here. WTI crude right through here. The big fights, okay, going with this. We'll see what the markets can do. Higher lows, higher highs, and the market fighting its battle right here in gasoline. But it's in an uptrend, not a downtrend. I hate the risk. It's very large, but you weren't able to stay down there, all right? So the markets have all come alive, and I think a lot of it has to do with fears of a retaliation, what is going on. And natural gas exploded, if you really look at it, back to the upside here. We've seen natural gas getting bids in Europe as there's problems. France is in a fight with its neighbors because it's still taking LNG from Russia. It's allowed to, but it doesn't look right doing that. And there's worries about where the supplies are going to come from. There's some problems that are going on in other countries that produce LNG. So you'd have to read about it. But now I think you've made a trade bottom. And the question is, you're not in an uptrend. You've got a higher high, lower low. So just something that I'm looking at there. So as I said, if you'd like to learn swing lines, moving averages, stochastics as I teach them, Bollinger Bands, and the use of window envelopes, which is completely different than what you think window envelopes are in the standard manner, I teach this all in my course. And in the course, it's 45 video chapters. So you can take your time, you look at the chapters, I give you the charting software, the data's right in there, and you go back to the data that I show in the videos. Then the beauty is on those chapters, each morning you're joining me during the course. And you're going to see in live, in other words, as I'm recording in the morning, what I'm seeing for the charts, 40 futures charts, 40 ETFs. You're going to see all that. You get my written research where I explain a lot of this. So this is all tied in between the charting software, between the course, between you seeing the examples. I drill in, and you can always write questions of me. So you go to iraepstein.com. That's iraepstein.com. Courses, when you're on the top. You can move your cursor to the top right there and do it just as well. Okay? I'm Ira. I hope you take the rest of the summer and learn. That's what this is about. Once you start doing it, you get hooked on it. I'm Ira. Take care.